don't have very good rhythm. I can floss though. Osteoporosis, how do you say that? Bone loss, bar. I don't know why I say bar. I say harsh and bar. And my kuna slips out every now and then. I say some other things too. Well, one today is Thursday, November 20th, 2025, and this is the week in charts. I just want to thank all you guys and gals for attending. I appreciate you taking time out of your busy schedule to be here. Once again, I've done a poor job of promoting the show. The show's on Thursdays. You can go to davelandry.com/webinar to register. The software is flipping back and forth on me. We had to go back to the old version today, so who knows if the links will work or not, but we're working on it. If you're in the Facebook group, I'll start putting a link in there. I guess I could tweet it out everywhere else. All right, what are we talking about? Current market conditions. Boy, well, I have a lot to say about that, especially given today's action. I don't want to spoil it, but today is no bueno. I spoiled it anyway. I'm going to continue to talk about the missing piece when it comes to trading. And one thing that's real important is open profit drawdowns and outright drawdowns too, for that matter, especially in profitable positions or soon to be profitable positions. That'll make a lot of sense in just 1 second. So I want to focus on that. There's all my contact information. I'll show you that in a little more detail in 1 second. There's a disclaimer screen. As you know, you can lose money trading, or as often sum it up. All predictions about the future and a lot of stuff to happen between now and then. All right, there's my contact stuff. If you need to reach me, you can also reach me at dave@davelandry.com. The Facebook group is Dave Landry's Trend Traders. Like I said, you put that in here. You do have to be at least a gold member of my website to participate. All right, as I've said 1,000 times, when I was starting out trading, and I had mixed results, and then fortunately I did really well in a few trades, and in hindsight, probably too much risk. I probably could have blown up really easily, but that allowed me to survive for a while. My cost of living wasn't super high way back then, and I was able to survive for a while, and then began doing some other things, and fortunately within the business and all. And some of those things within the business was programming and systems research, and also helping. There was one in particular, but helping a trader find stocks. And eventually, I actually did a little ghostwriting for him once it clicked with me and everything. But the point I'm trying to get to is that being able to see these traders actually trade and do well trading and see what setups they were going after, and see them actually make money on the setups, see them lose money sometimes. It just kind of normalized how I was feeling. And it's a very lonely sport out there. And I want to take what I learned 30 years ago, and wish he tried to say somebody would have told me 30 something years ago, and bring it forward to today. And everything I do, hopefully I have that mantra in mind. And you know, I was thinking before I went live, from a selfish standpoint, it's kind of like, you know, when will I ever retire? I don't know, because, you know, you make me so much better. It's like, there's one here in a minute I'll show you. I'm like, okay, what should I do with it? It's like, well, what would Dave Landry do, you know? And it forces me to, number one, don't chase my own tail or don't look for action. And it's like, okay, do I really want to put capital in the harm's way, especially if I'm going to recommend this stock for other people too? So that becomes like a double whammy. I lose money, and on top of it, I get bitched at. You know, if it's a mediocre setup. Now, if it's a good looking setup and it loses money, you know, it happens. It comes with the territory. And we're going to cover a lot of that. It comes with the territory in just 1 second. But it's very important to see somebody actually do this ahead of time. And I've known some, I don't know them personally, but I've seen some very disingenuous people out there doing some crazy things. It's like I'm torn. It's market is so crazy. I just want to kind of watch it. Actually, I'm kind of blessed because everything's already set up, and everything except for one position hit the IPT, and the trailing stop is working. And maybe I could flesh that out a little bit next week. But anyway, I want to talk about living through open losses and open profit drawdowns. And it's one of those things that comes with the territory. And as I've told the story 1,000 times, Mike Moody was giving a presentation on momentum. And back then, that was when I was first doing the Landry 100, and I quit for a few years, probably 10 years. And then I started it up a couple of years ago. And I wish I never would have quit. But anyway, I said, Mike, momentum always ends badly. Is there anything I could do about that? And he's like, Dave, if you're gonna have a baby, babies are neat, they're cool, it's great having a baby, but you're gonna have a lot of baby poop. So baby poop is what comes with momentum. You're going to have open profit drawdowns, you're going to have outright drawdowns, you're going to have periods where you're really going to have to sit on your hands. And that's kind of where we are now. And I'm getting ready to possibly do some shorting really, really, really soon here. And I'll show you that when we get to the live charts. And there's a few charts towards the end I want to show you. And I think today, and I'm kind of getting ahead of myself, but today is a very pivotal day. Some guy asked me in the gym, he was trying to get a long-term prediction out of me. And I said, well, look, the easy part's over. We had this great trend, and today could be pivotal if we don't recover from this slide on NVIDIA. Now, at the time, I didn't know NVIDIA was going to slide, obviously, but I told him, if NVIDIA comes right back in, if the market comes right back in, this could get fairly ugly fairly quickly. And it looks like it's, well, you know what? We're only off 30, but we were up, what, 100 or something? That's a pretty big swing. Anyway, so getting back to open profit drawdowns, as I've said before, many, many, many times, Curtis Facebook, if I have it handy, I need to keep all those books close by. Trading from the Gut. He's got another one too. I think it's The Way of the Turtle. As I've said ad nauseum, if you're going to read the turtle books, I think you should read one that was written by an actual turtle. Now, I know he's got some interesting background with him. He's gotten a little bit of a tiff going between him and Covell, which is kind of interesting. Kind of eat your popcorn and watch that thing happen. I guess that happened a while back. I don't know if Curtis is still in jail or not, but that's another story altogether. Anyway, one thing he said was that Richard Dennis was okay with open profit drawdowns. That's one of those baby poop kind of things that comes with the territory. So if you were one of the traders he hired to see if they could make, they could grow traders like they grew turtles in Singapore, then if you took the position, if you should have taken the position, or you took the position, and you had a lot of money in that position, or a lot of profits in that position, I should say, and then that profit eroded a little bit, he was pretty cool with that because he knew there was nothing you could do with that. It comes to territory. And by the way, this is the point I want to try to get to today. If you're going to ride out a longer term trend and make a lot of money, you're going to have to let those open profits draw down. And that's really hard. And I'm not saying throw caution to the wind. I'm saying follow your system. Anyway, that'll make sense as we go through it. This is TFPM. We're still long this one. It's a gold stock. I think gold's getting whacked today, though. You can see it was in a longer term uptrend, a little bit longer than what's shown here. Pulls back to the moving average. That's a Landry light pullback. If you look at the Landry light down below, you can see it goes to 0. I'm starting to like that Landry light more and more. I really am. It just amazes me when I look at charts and you can see, like, look at this trend. I feel like Tiny O. Look at this trend here. That entire trend, nothing but Landry light, right? Anyway, issue was there. Stop was here. So this thing, initial profit target up here. This thing initially just kind of dumped before it took off. Anyway, you get to that initial profit target, and I didn't have that program. Don't have that in there, but that was an initial drop, and it was I think it was like $1,800 per 100K if memory serves on that. So that was an ugly loss that you had pretty quickly. Okay, you're 2 weeks into the trade, you're down $1,800. So that's the open loss drawdown. That's an open loss, and that's the. Let me just back it up for a second to let you know why that's not in there. Initially, I was just wanting to talk about open profit drawdowns, and then as I'm going live, I started thinking that, well, maybe we need to talk a little bit about open drawdowns and positions too. The point there is, if we just back this out to honor your stop, you already have about an $1,800 loss here. Here, you're going to have a $2,000 loss. Let it shake out, okay? Don't worry about that. I know, don't worry. Don't think about elephants, right? But don't worry so much about that incremental loss that you might face. Just follow the plan. And every now and then you get stopped out. You're like, oh, I could have saved a couple $100. Well, yeah, but you're also going to miss the mother of all trends, or you have the potential to put yourself into a state of regret. Trading, if you had to boil it all down, It's avoiding as many or as much state of regret as possible. And I got sucked in a little bit over the last couple of weeks because it was pretty easy trading up until the last couple of weeks. And I got sucked in some intraday stuff. I probably should not have done that. I don't know, guilty as charged. But every now and then, the intraday stuff could really print money. Like a day like today, knock on wood, come in. But if you find yourself kind of chasing your own tail, going long, going short, going long, going short, you need to just sit back, relax, I know, haha, and let the market come to you. Definition of insanity, according to Einstein, is doing the same thing over and over again and expecting a different outcome. So if you ever find yourself banging your head against the wall with trading, stop. And it feels so good, when you stop. That's why, what's the old saying? It's like banging your head against the wall. It feels so good when you quit. But if you find yourself in that position, that's one thing I've been thinking about a lot. When you get to the gym, I think about all these things. And when you get a little exercise, I think it opens up your brain and stuff. Plus all the supplements I'm taking. Anyway, it gets that nice and flush. But one thing I was thinking about is that with trading, you really have to let the market come to you. And if you do that, you'll do just fine. But if you try to chase every zig and zag, you're going to have a hard time. But the good thing about the core methodology here, without getting into all the weeds again about the intraday stuff, the good thing about the core methodology, it's fairly cut and dry. You find a good looking setup, and then you have an entry, a stop, an initial profit target, and you just follow the plan. I know, easier said than done. But anyway, that initial draw, oh, there it is right there. Okay, so that was actually a little bit more than $2,000. I thought I had it in here. So the reason that was a little bit more than 2,000 is because the entry on this was slightly higher. It had a little bit of a gap type of entry. Anyway, so you initially down $2,000. And if you take a look at this one here, that was $1,000 drawdown because we already took half profits at this point. Oh, take that back. We haven't taken half profits. So that's $1,000 drawdown. And this was the $881 drawdown, which would have been much bigger had we not taken profits. And I'm going to drive that take it profit point home in 1 second. And then right here, this was a $2,400 drawdown. Okay. Now, if you look at where you were, this is one thing I would highly recommend you do. Okay. And it's hard because we're all looking at the peak. Oh man, I'm up $10,000. What can I do with $10,000? I can go to vacation. I can pay some bills. I can do whatever, And that's a very dangerous game to play. If you're going to minimally monetize, maybe minimally monetize down to your stop. The other thing to do is you need to look at where you were and where you are, okay? I've given up a lot of money over the past several weeks, okay? I got stopped out of some stuff. I did manage to hang on to some things with a little discretion, and we'll look at that. And sometimes that works, and sometimes it doesn't. Watch last week's presentation for more on that. But anyway, long story endless, go back to where you were and look at where you are now, especially on a trade like this that had a lot of open profit drawdowns. And you can see it's 3,500 plus 1,000. And I forget the percentages on this, but the percentages are pretty good because we were getting in the 20s, and now we're way into the 30s, or somewhat into the 30s at least. So it was a pretty substantial trade, 50% run or so. Anyway, like I just said, lots and lots of open profit drawdowns. Now let's take a look at Katos. This is a defense stock that closed out recently. Why'd you have to end all those wars? Damn it! I'm half kidding. Anyway, you can see all the parameters there. By the way, this should be 25 instead of 26. But if you want to see all of these, you can go to youtube.com/Dave Landry. You can also go to davelandry.com/archives. The archives go way back. The YouTube ones are more newer, and I try to make those public as quickly as possible. The YouTube ones are for my international clients. So if you don't speak English as your first language, then YouTube has a really good translation. The people at my video provider wanted to provide me with translation, and it was going to cost hundreds and hundreds and hundreds of dollars. And I'm like, well, YouTube does it for free. Anyway, it's pretty good from what I understand. This was Katos way back in June, and there's all your parameters: entry, stop, an initial profit target. So you bank $1,000. Remember, we take off half when that happens. Stop comes a break even. Okay, now we're free rolling, as my friend Charlie Kirk says, Charlie the Trader. Anyway, you can see it stopped out, and here's your gains. 106% gain, much better than the Pokin and I, okay? 60% on the first loaf, $1,000 per 100K. 106% on the second loaf, $5,800 and change. Okay, so that's a pretty good trade, especially on if you look at like the model account, and I do take trades within the model account, and I take trades in other accounts too, but I do try to mimic the services as best as possible. I do use some discretion because I can't use a double negative. I can't not use discretion, which I'm going to teach you and show you in just one second, and how it's very important to learn longer term. Anyway, so you bank 950, and that's because the entry, like I just said a minute ago, was a little bit higher than intended. Now, this one really didn't have too bad of drawdowns. You had a lot of flat time, okay? So June, July, August, Monday, Tuesday, Thursday, Wednesday. So it's 3 months where you make a little, lose a little, make a little, lose a little, and you finally hit that initial profit target, okay? But this drawdown here was substantial. That's 29.15. And notice that it came back 1860, okay? Now, fortunately, the stop was just below this pullback. Now, we didn't know that when it happened. Now, keep in mind this stop trails gradually as the stock moves in our favor. And what I'm trying to do this week is a little same charts, or some of the same charts, but without going through a lot of the details that we went through in prior weeks. So go back to prior weeks if you want to see the trailing stop and more of the money management. This is more of the living with the trades. And believe me, it's hard to live with something, okay? It's easy to look at it on paper. It's easy to think about it, okay? It's easy to make the plan. All that stuff is easy, right? Actually doing it is tough. But this would, knock on wood, has come back 1864 per 100K. Now, if you look at the net movement, that's a pretty decent move. 5,555 plus 950. So that's, you know, 6.5 grand round numbers per 100K, or 6.5% return on your entire account. On your entire account, okay? That's huge, especially given the relatively short time frame, okay, in this particular position. And if you do that on a few positions, you can have a really, really good year. Anyway, here's the KDOS, and I wanted to show some of the drawdowns in this. And you can see, like, that was a $1,700 drawdown per 100K, and it doesn't look like much of a pullback. But if you're watching your equity drop and drop and drop and drop and drop, that's substantial. And then notice that, and this is the ugly part that I wanted to show you. And I don't know about other guys out there. I know most of them won't, but I will show you the ugly. And that's what you really need to do. Anybody could show you the good, you know, but somebody needs to point out the ugly, so you don't feel like, you know, what's wrong with me? I just gave up $4,000. Well, that comes with territory. Ask Mr. Dennis, you know. But anyway, so that was a $4,000 open loss. And had you not stopped out, you would have lost another $25.93. But overall, that trade was substantial. So that was like a nearly 100% run. You gave up some in the end, obviously. I think it was 80-something% or whatever overall. So that's much better than the poke of the eye. Now, because we might be shorting soon, I thought it would be very, very, very important for me. What do kids say nowadays? Important. Literally. What's up with these kids? I've never thought I'd be old enough to say that, but I'm 60 now, so I could say that. I'm gonna be 61. Jeez. I'm from the 1900s. Anyway, so you banked 1,000, around numbers, on this short. Sold off nicely, but then it obviously came back. Now, a couple things about the short side, as I preach. Number one, you're not going to get rich on the short side because, like, just right here, it's a perfect example. You have these retrace rallies. Even if the stock roll right back over, a lot of times the retrace rallies take you out. It is what it is. It's another one of those baby poop things. comes with the territory, right? The real reason, as I preach, you want to learn how to short is so you can see both sides of the market. As I've said ad nauseum, my friends who run lots and lots and lots and lots of money, hundreds of millions of dollars, who are long only oriented by their charters, and there's nothing against that, right? I envy them. No, I don't envy them, but maybe I'm a little jealous at some point. That would be great. However, the problem that I have is they're always kind of glass half full because they've got hundreds of millions of dollars in stocks, and they're kind of tend to look on the bright side a little bit. Now, it's not to take away from the performance or anything they've done or accomplished. They've accomplished a lot more in the money management field than I certainly have, but they tend to see the market as always kind of glass half full. And I get that. If you learn how to short, you begin to see both sides. And again, you're not getting rich on the short side, but you will occasionally make some money when the market goes down. And also, there are times when maybe, I wouldn't say hedge, but there are times when you can put on shares, especially like an intraday basis, like today or whatever, where you can make a little bit of money on the downside to help mitigate what's happening on your longs. I'm not saying hedge your longs, but I'm saying if you see an opening gap reversal in the market, take it, okay? Anyway, the point I'm trying to get to is you do have to be super disciplined on the short side, okay? Yes, it helps you to see both sides of the market. It helps you to see when a trend may be coming to an end, like now, okay? Which I'm going to show you the good and the bad about the market. There is some good still left, okay? Glass half full, right? I just said that. But on the short side, you got to be careful because it can really get away from you. You have potentially open-ended losses. Now, keep in mind, as you run out of margin, your broker will gladly close down your position for you. So that's kind of like one of those in theory things. You'd have to keep putting money in. So yeah, your losses aren't unlimited, but in theory, they are. So overall, round numbers, you made about $1,300 on this trade. Over that short period of time, annualized, that's freaking huge, okay? But yeah, 1.3% a day, well, what's a big deal? Well, that's over your overall account. And it was probably a 20-something percent type of move and maybe 10% move or whatever, because this thing was up at like 140 and it ran down to 110. Pretty impressive move there before it stops out. But anyway, if you didn't use stops, oh, here we go. So yeah, it wasn't as big as I thought. It was only 12% and then 4%, but it was actually much bigger, obviously, because of before the retrace rally. So that there goes there. There's your example right there, how quickly money can evaporate on the short side. But again, much better than a poke in the eye type of trade, 1.3% on your entire account over a short period of time. That's if that's the worst you ever did, you would own the world, okay? Now, let's say you threw caution to the wind, and if you took profits, partial profits, then you'd have banked 1,000 round numbers, then you'd have $5,300 in open losses. Now, if you use no money management whatsoever, you'd have been down 10.5 grand on this position. So money management is crucial. There's 2 points I'm trying to make. You have to live with drawdowns, but you also have to make sure you're using that proper money management. Otherwise, you're not going to survive this game. Again, I was thinking earlier, or in the gym, I get a lot of thinking done there sometimes. But the secret to trading is being able to live with these drawdowns and to live with the bad. Okay, so everybody, it's great when things are going well, but you have to live with coming back to Mr. Moody's point, you have to live with the baby poop when it comes to markets. And if you can live with that, and then when things start getting hard, like now, okay, the market's just not following through, it's chopping around. Something's wrong, okay? You're no longer in sync with the markets. Greg Morris calls it dancing with the trend. He was going to name his book that, which I thought would have been brilliant, but the publisher talked him out of it. I think he regrets that because dancing with the trend is so much better. And to keep his analogy, when your song's playing, you can move around, you can dance. Well, some of us can. I don't have very good rhythm. I can floss though. I could do the floss, but anyway, well, I would knock my camera over. But I can't. I don't have a very good rhythm. But when your song's playing, it's very easy to dance and all. But if you play a song that you don't like, or you're not familiar with, much tougher. So you've got to let that market come to you and dance with the trend. Anyway, money management, vitally important. Now, I always hate to do a presentation on discretion because it's sort of, I feel like I'm pouring salt into people's wounds. But I've been doing these presentations for 20 years probably on discretion. And so it's not just the current, my current clients, my apologies if you stopped out of some of these that worked out. And it doesn't always work out. Last week I showed you where it didn't, and I lost money by using discretion. I also missed a big opportunity and lost money on that too, I think. Anyway, discretion longer term can really pay off. If you're new to trading or newer to my methodology, then by all means follow things a little bit more mechanically. Every now and then, like it was last week or week before, that'll pay off better than discretion, okay? Longer term though, if you can hang with a position, discretion will pay off. So this one pulls back, entry stop, IPT. So bank the 1,000, stop comes to break even. And trail the stop higher. So there's the example of the trailing stop, okay? So this one made the opening gap reversal. I think we talked about this one last week. And that's your stop. So you made 59% of the trade, better than poking the eye, right? But the stop was, the open was the exact low of the day, okay? So let's take a look at that. So your stop is here, okay? The stock opens below your stop. Now, I actually learned this from my futures broker in the early 90s, way back in the day. And I got whacked a few times and more than a few times, but anyway, we were in one of these situations. I called him up in a bit of a panic, and he's like, well, Dave, you already have the loss. Let's see if we can improve upon things, okay? And that's kind of like his way of saying, like, don't throw caution to the wind, but let's see what happens, okay? So you're getting whacked. The worst you wanted to, the most you wanted to lose, not you want to lose anything, but your biggest loss possible that you're willing to stomach, right, is right here. Now keep in mind this is an open, these are open private drawdowns, but still. So it gaps below that level. So if you follow mechanically, you have to get out in the open, okay? What I like to do is, okay, just take a deep breath and say, wait a minute, let's just see if this is overdone. Let's see if it begins to come back a little bit. In this particular case, fortunately, the low was right around that open, maybe a cent or two below it. So you're faced with a few options when you have this opening gap reversal situation. You can exit on an improvement, okay? So you're down here at $3 and change. Let's say it goes to $4 or whatever. Maybe you get out. You could exit on an improve, like if it continues to improve, you could exit on the close, okay? If it closes a point higher than it starts or whatever, then you could exit on the close. And then the other thing you could possibly do as part of 1 and 2 would be to trail a stop intraday, and we're looking to improve upon our loss or make our loss smaller, right? And the other thing you could do is you could stick with a position on strong close. I realize 1, 2, and 3 are kind of the same, but I'm just trying to let you know how to do them. Now, I actually stuck with this, but you could see the opening gap was pretty much the low of the day, and this thing came back nicely. Percentage-wise, this is huge, okay, as far as the correction here. So if you were to exit on the close, you would have made an $845 improvement. Now, this is all a hypothetical 100K. Again, I do take these trades in a model account. I do have other accounts that take them in too. So round numbers, 1%, 0.8%, I guess, which would be 845 per 100K improvement. Now, I stuck with the position, and we'll see how that shakes out. So here's the thing. I'm faced with a now what situation, and we're going to get to this in just one second. But one of the problems with discretion is you're creating more decisions, okay? And that's kind of the one thing I sort of backed into earlier is the state of regrets. If you start adding on more and more decisions, remember each decision from a neurological standpoint comes with stress and a consequence, okay? So if you start adding in a bunch of decisions, your life is going to get harder. So that's kind of the hard part. It's kind of a no-brainer on opening gap reversal. Again, my apologies to existing clients for pouring salt in the wounds, but that's a pretty obvious, this is an obvious use for discretion. It gaps lower, you're like mother, father, and then you take a deep breath, take a sip of coffee or your Diet Coke. Somebody called it a fridge cigarette. I'm down to one a day. I used to drink a lot. But anyway, many years ago. Opening gap reversal, kind of a no-brainer. You just have to kind of, I hate to say close your eyes, but you almost have to close your eyes, let it open and see what happens. Now, I don't want to make it sound like it's always going to be sunshine and rainbows. Might gap open, bounce around a little bit, and they might halt the damn thing, okay? Who knows, okay? It could happen. Spelled with a silent SH, or it happens. But anyway, so now I have a bit of a now what situation, like where do I get out in this position? So based on where it was yesterday, I had a trailing stop in intraday to exit the remaining shares on this one. And what are we doing today? Oh, looks like I need to be out of it. So yeah, I should be out of this position now, okay? So maybe I'll do that. In a little while. That was good. All right. Now here's another case of discretion. You can see this one accelerating momentum, which is a strategy in and of itself. Nice little pullback. There's all your parameters. KYTX. Entry was here. Stop is here. Now this is one of those rare cases. And see, I probably would sell a lot more trading services. I said, oh man, this happens all the time. You know, we get in and we hit that IPT in one day, like a 20% move in one day. No, that doesn't happen. It is a bit of a rarity. But it does kind of back in once again. I'm doing a lot of backing in today to the million little things, okay? And one of the million little things is like have your trading plan in front of you, have the spreadsheet up, okay, or snapshot of my spreadsheet up for today's recommendations, and say, oh, I got to enter here. So be quick to put that stop entry order is probably the best way to enter these trades. And that way you get triggered in, and if it doesn't trigger, then no capital gets put into harm's way. I put in an order early, like literally right before we went live in Lab D, okay, because it looked like it was getting ready to break down. I put in an order above the market, and it triggered in. And so right before we went live, I put in a limit order and a trailing stop just to let that market take care of itself. I just hit the IPT. So that trailing stop is going to take me out on the rest. Knock on wood. It's been a pretty good morning, not for my positions, but for the intraday stuff, because it was a very kind of cut and dry type of opening gap reversal in the overall market. And fortunately, by using a limit and a trailing stop, those positions are taking care of themselves. And I could actually go about my life, give a webinar, okay, with just an occasional squirrel type of ADD hit when something triggers or hits a stop or whatever. Anyway, so yeah, this was 25% one day. It doesn't happen every day. If it happened every day, you'd never see my fat ass again, okay? You know, these guys out there, oh, look, I made 600%. It's like, yeah, but how often do you do that? Because, you know, why would you be sticking around if you were doing that well? I'm sticking around because you make me a better trader. You make me follow my plan. You make me not do stupid stuff. Which reminds me, I had to get all that NUAI. Anyway, stop to break even. Now, this is a case where a stop nick, and actually it was just slightly, this should be slightly higher, but it actually stopped out on this day, and it was like to a T. So the stop was at 630, and this is one of those discretionary type of calls. And I didn't get time and sales quick enough to see what happened, to see if there was an actual trading around that area or what. So it would be kind of like completely legitimate. But anyway, it was an exact to the exact penny. Okay, when that happens, it's okay to use a little discretion. Like, okay, I know I'm stopped out. Let's just see what happens. And one thing to remember, these one-day wonders are great. I love them. Don't get me wrong. We all love them. We all talk about them in Facebook when they happen. We all high-five each other virtually. But the reality is, when a market moves that far, that fast, it's very hard for it to sustain. I'd much rather see a more gradual move, as painful as it might be, like in the K-TOS and the K, what was it? There was a few other ones. The golds, okay, TFPM, KGC, they all took their own sweet time about moving along. And so far, so good. We're up around triple digits in those, at least we were before today. But anyway, if it hits the stop exactly, I remember years ago, we had a stop at 9, and it touched 9, but I didn't see any actual trades there. Maybe 200 shares, if that much. Technically and mechanically, it stopped out, but I didn't know anybody that actually got stopped out in a case like that. But if you're following mechanically and you didn't have an actual order in place, it's like, oh, well, it technically hit the stop. I need to get out. And somebody said, well, why don't you set the stop at 8.99? I'm like, nobody's that good, okay? Nobody could predict the exacts of the market. It's another one of those things that you'd never see my fat ass if I could. Anyway, so stop, Nick, and mechanically, you would make $0, 0%. Better than the poke in the eye trade. You made 1% in one day, okay? And you got stopped out 2 weeks later for 0. So annualized, even if you count the number of days total in trade, that's still pretty darn good. But you can see it made a pretty good run from there. All right, just got knocked out of futures. Ooh. Steak dinner tonight. So from there to here is a 27% improvement, or 1107 per 100K. Now I did notice it did drop about 10%, 10 cents below that 630, and I didn't realize. I guess I didn't realize it at the time, but maybe I should have been paying more attention to that. But again, that would have, for me, that still would have been a discretionary type of thing. Now, I'm going to get to this in 1 second, but you don't want to throw caution in the wind. But when you have a profitable position overall like this, okay, that's one way I look at it. Is like, okay, I'm up $1,000. If I could give it a little bit of wiggle room, maybe lose $100 or whatever the case is of that 1,000 to try to stay with the position, then by all means, it's worth it. Okay, so 10 cents in a position like this, I can live with that. Now you got to be careful, because you could have like stop creep. Okay, you're 10% below, 10 cents below your stop. So let's say your stop's at 630 and it drops 10 cents below, so 620, and the next day it drops to 610, and then it's at 6. It's like at some point you're going to have to bail out. And of course, with every other decision, adds more stress, and something bad could still happen. However, longer term, I think if you catch 1 or 2 based with a little discretion, it'll pay off. So a couple of random thoughts, okay? Again, discretion is not throwing caution to the wind, but rather seeking improvement. The bomb is already blown up, okay? How can we improve upon the situation? Now, as I said earlier, more decisions equals more stress. It could compound psychological errors, okay? So it's like, if you think, oh, I might get out, I might stay in, okay, what's going to happen tomorrow? I knew I should have stayed in. I knew I should have got out, because you created this animosity for yourself where you had 2 decisions, but you didn't decide on either one of those, okay? So no matter what happens, you put yourself into a state of regret. So it's really a lot of it. I think it was Scott Adams, and there's been a few others. It talks about discipline getting used up. And I've said that 1,000 times, right? I've tried working out like when the market slowed down in the middle of the day or at lunchtime, or even worse, after work, okay? So I come in, I wake up at 4:55 every day, and I do my writing and whatever. And I used to come to work after that, and then at the end of the day, my goal was to go to the gym. Well, guess what? I never made it to the gym. And it wasn't until I had some buddies that started working out around the corner where I would go there every day, and I got used to that as part of my routine. And then when things kind of fell apart there, I think it was mostly COVID or whatever that kind of messed things up. One guy hurt his shoulder, and there's some other stuff happening, and I just started going to the gym. And anyway, when I started doing that, it worked out nice because it became part of routine. The point I was trying to get to is every day before that, I fully intended on going to the gym. But by the end of the day, I was exhausted. I was tired. I was like, you know what? I'll go tomorrow. So your discipline gets used up. And our job really is a management of our discipline, if you think about that. So you don't want to, just think of it as like capital. You don't want to fritter away discipline on making too many decisions or put yourself in a state of animosity or whatever by thinking like, oh, I should get out, or maybe I'll stay in. Which is it? Okay, you need to make that plan. Now, the hard part is no matter what you do, you have to live with that decision. Okay, so I made some discretionary calls. There's been 3 or 4 of them recently. It worked out really well. There was one that did not work out so well. I was willing to live with all 4 of those decisions. Did I drop an F-bomb? Yes. An F-bomb right here. Can't drop it anymore. It weighs a ton. Mike Peterson, who I met at the Charlie Kirk retreat, gave me that, which is very nice of him. Anyway, like everything else, it all boils down to good reps. I did a whole presentation on that before, and I've done more in the past, but that one recently comes to mind. We were talking about him this morning. There's a guy in the gym who's a super nice guy, a little bit older. I think he's 77, and he just jerks the weights around. He's a little fella. He jerks the weights around. He's horrible form, and he's had 3 rotator cuff surgeries, one since I've known him. And I thought to myself, this guy's going to rip his shoulder out again. He's a little guy. And we've all tried to tell him, slow it down. And we just gave up. I even talked to the trainer, like, can you, no offense, but, I'm 60 now, so I guess I'm one of them. But these old people have horrible form for some reason. They do like quarter reps and they throw things around. And I asked him, like, can you give a seminar to these old people so they don't hurt themselves? And he's like, they don't listen, So he said, I tried. But anyway, the point is he's getting in a lot of bad reps. Those are not good reps, okay? If he wants to maintain his longevity by working out and build a little muscle and prevent osteoporosis, how do you say that? Bone loss or whatever, and all this other stuff, then he needs to get in good reps so he's not spending 8 weeks in recovery from another shoulder surgery. So you need to get in good reps when it comes to discretion, when it comes to following the trading plan or whatever, and just have a plan on that. Have that uncle point in mind. Okay, so stock gaps here. Okay, all right, I have this loss overnight. It's a fact of life, right? I can take it right away, or I can take a little bit more loss, and it's going to suck if it gets hit. But if it does, it does. And a lot of times you get lucky, okay? And that opening gap is the low of the day, and you didn't have to risk any more than you already lost, okay? So that's where it's great. And hopefully I don't have to apologize about salt in the wounds in the future because we covered it here. All right. I want to shift gears and talk about a few things that's going on with the market before we get to the live charts. Now, longer term, okay, where are we now? Longer term, things still look pretty good, okay? And I was inspired by Jeff, one of my clients, who said that he thinks about exiting a market when it's down 5% or more from the 50-week closing high. And that inspired me to put these zones in here. So the TFM system sells when you close below 10% of the 50-week closing high and below the 50-week closing simple moving average, okay? So your sell is way down here. You can see the market has pulled up nicely or pulled away from that moving average nicely. We're getting kind of stretched. So as long as we're in this green zone within 5% of all-time highs or 50-week highs in case of the system, which is also all-time highs, the market is okay. Don't worry, relax. I know, haha. but we do have to pay attention, okay? So if you were to drill down to a 60-minute chart, and Jim in my Facebook group, he's been around since the 70s. He does a lot of market analysis, and I know that he watches the 60-minute chart, and that's usually his trigger to pulling his horns a little bit. I don't know if he pulls out of everything or whatever, but usually when we get an hourly bow tie, he knows it's time to maybe rethink your longer term buy strategy or whatever you're long. You need to rethink whether or not you want to continue to hold it. Anyway, he's been around, been trading since the 70s, so he's pretty good at all this kind of stuff. We got a lot of smart people in the group, by the way. Surprised they let me be a member. But anyway, there's your bow tie. Your sell would have been right there if you're following the intraday signal. Now, I wouldn't take an intraday signal and hold it overnight. It's something like this, but it does kind of let you know that, okay, maybe the market's in trouble. Now, this morning, of course, we had this big fat opening gap reversal, so that would have creamed you on your position, but then the market came back in significantly, and now it's going back down again. Okay, so I think it pays to pay attention to this, and I'm glad that Jim years ago pointed that out. Okay, now you don't want to get too caught up in these kind of things. Okay, and Jim's willing to get back in once the dust settles with the bow tie and all. So if that's what you do, just make sure you're willing to get back in. I don't necessarily cash out of everything when something like this happens, but it's one of those aha things, like, okay, wait a minute, this bull market might be slowing a little bit. At least it stopped on the hourly chart. Okay, and that's kind of a good way of looking at it. All right, it's the bull market. Are we in the bull market? Yeah. Are we in the bull market hourly chart? Not anymore. Are we in the bull market on the daily chart? It's getting close, okay, to ending. And then this morning, of course, we had the opening gap reversal. This was the whole point I was making earlier in the gym. It's like, okay, the market's just up huge. We're up about 100-something points on the NVIDIA earnings, okay? And NVIDIA has come right back in. For S&Gs, I shorted 20 shares. Truth be told, okay? Wow, a big 20 shares. I didn't want it's a little bit outside of my methodology to do the kind of thing. So I said, well, let me just take kind of like an S&G position. And let's see, is that doing okay? Yeah, $150, better than poking the eye, okay? But yeah, don't rush out. I know you can't get a little bit pregnant, but I just felt like it was worth a shot. But I didn't want to lose a lot of money. So you sort of need to look at your future self, as I've said before. And is this action going to put me in a state of regret? Okay, so now I'm gonna kind of get a little freshman psychology on you. I kind of felt like if I didn't participate psychologically, I'd be pissed off because I felt like it was going to move. But I also wasn't willing to take a big loss on this thing. So I was like, 20 shares, who cares, right? Not that you want to throw caution to the wind, but if you're gonna take an off the cuff type of trade, then you want to make sure you're doing it in a smaller size than normal. And that's one of those things that's kind of like a trader's call. It's like it wasn't an official setup. It's just something like, okay, the whole world rushes in to buy this stock on earnings. The market's looking iffy. Everything's looking questionable. I'm just going to short a few shares and get it out of my system. I don't know. Maybe just told you, you can't get a little bit pregnant, right? Bad behavior. But I felt like it was worth a shot in this case. You got to look at your future states of regret and how is current Dave going to piss off future Dave, okay? And if you're not named Dave, insert your name. So the bow tie, the daily bow tie in the Russell has already happened, okay? This is not the end of the world, but it's something to pay attention to. So down here, we have proper order, and proper order, like my other indicators, is really an illustrator, okay? It shows you what's happening in the charts, and it does help you to quantify and qualify what's happening, just in case you're looking at things, as I said earlier, kind of glass half full, okay? So when you have downtrend proper order, it's usually not a good thing. When you have uptrend proper order, it's usually a good thing. And you can see we had uptrend proper order for almost this entire trend. We did have a little squeeze in the moving average. This is not one of my patterns, but I know some people will trade a little squeeze, which is just a way of defining a pullback. and a lot of people make a big deal about it and sell you $1,000 course. But I digress. I'll give you the bow tie for free. Anyway, you can see bow tie to the downside. So the sell technically would be below this low, but obviously, if today holds above this low, then you would trade it more like a pullback. Okay, so now we're at downtrend purple water. This is the red. So the easy part is over. This nice big fat easy part could be done. Now this is a post I put on Twitter a few days ago. I think I also put it in my Facebook group. I'm talking a lot about the gym today. I do go, believe it or not. It's my wife picked at me one time because she's like, "You back already? What'd you do? Fly by?" You don't need to spend a lot of time in the gym, you know. Anyway, before I digress too far, one of my buddies in the gym, and Bitcoin was probably about, this was like a week ago, so it's probably closer to 100K, and I think it might have been just under 100, maybe like 99. And he's like, he's a huge Bitcoin aficionado. I'm a fan of crypto too, but I'm also a trend following moron. Okay, and one of my sayings is, and I know it's bad English, but I think it's okay. It's always darkest right before it gets more dark. Okay, a lot of people think it's on sale, and I reposted this. Portnoy was talking about how he bought 5 million or 4 million in crypto or whatever, you know, and what's a movie Taken? Good luck. Yeah. So I posted this in his as a reply. So you don't want to catch the falling knife, and Bitcoin I think is in the 80s right now, 80,000 something or whatever. So yeah, I'm a bull longer term, but shorter term, this is not good, right? So don't think of stocks as being on sale. Okay, speaking of crypto, let's hop into crypto real quick. I'm not going to spend a lot of time there because I doubt fairly seriously there's nothing to do. So let's just take a look at Bitcoin real quick. Okay, so Bitcoin, as I just said, looking pretty ugly in here, 87,122. Now, where was Bitcoin when I put that tweet out? 92, okay, now almost 93. So that's dropped $6,000 since I put that tweet out. Not that it will always continue to follow through, but there's no need to catch a falling knife, okay? I get asked all the time, how come the market's no longer going up? And it's like, well, demand has waned. I mean, that's the only answer I can give. And I was thinking about that the other night. My mother-in-law is always asking me, why did it do this? And my friend's like, why is it doing this? I'm like, I don't know. Well, isn't that your job to know? No, it's not. My job is to be a trend following moron, okay? And I used to try to outsmart the market until I got called a trend following moron. And after my bruised ego got over that, I'm like, you know what? I lose money when I fight trends. I make money when I follow trends overall, longer term, obviously. So maybe I am a trend following moron. But anyway, Bitcoin's looking ugly. When Bitcoin's ugly, as a general statement, you can avoid the other crypto, and I've been a little lax in my analysis lately. I do a scan every couple of days, but there's really not a whole lot to do with crypto at the moment, and Bitcoin's usually your bellwether. And as I've said quite a bit, if Bitcoin's doing well, you could just sometimes come in here and look at these shitcoins, SHYT, sort them by percent gain. And you're not bottom fishing, but if they're breaking out to brand new highs with a little bit of vigor, not that I would trade this when it looks like it's kind of thin, but something like this, kind of like a pullback beginning to take off, that might be worth a shot if it wasn't. It looks thin, but if it wasn't thin. Is that like an old trade in here? Let's see. It's a really old trade. Anyway, so I can't imagine there's anything to do in the crypto right now. But if you guys want to look at any pairs, let me know. So we reset this one. This one looks okay, but again, I would err on the side of not doing anything as long as Bitcoin's in a downtrend. Now, here's a good thing, as I've said quite often. The bull bear cycles in crypto could be about 6 weeks. sometimes a little shorter, sometimes a little longer, obviously. So that's the good news. And if you're learning to trade, as crazy as it sounds, throw $1,000 in a crypto account and risk, I don't know, $20 a trade or something like that. And I think you're better off trading stocks longer term, okay? And catching some of those nice big moves like we did recently. But as far as the bull bear cycles, and that's the key, is living through the bull bear cycles, right? Bar. I don't know why I say bar. I say harsh and bar. And my kuna slips out every now and then. I say some other things too. Bad. Oh man, this market looks bad, Sha. You don't sound like Kunes, Dave. Stick around. It'll come out. All right. S&P 500 on the cusp of making a bow tie to the downside. It's not looking too pretty. Longer term still looks pretty good. Here's the 50-day moving average. Jim from the group reminded me to put those long-term moving averages in. Thank you, Jim. I don't use the 50 that much. I don't use the 200 that much. The simple. But when the market gets kind of iffy, I began to plot them because they are well watched, okay? And also, I do use the 50-week simple moving average in my PFM 10% system. All right, so let's see what a 200 is. Where's the 200? Oh, 200 is way down here, okay? So one thing I was talking about a lot lately is now we have a little structure with the market, okay? We had this consolidation, we broke out of it, we came right back into it, okay? So that tells me whoever bought here is kind of like a Johnny come lately, okay? So the Johnny come latelys are like, damn, this market's making new highs. I better get in or miss out, put up a shutout. So that's the FOMO. So that sucks everybody in, and then they recently got spit out. Now, as this gets a little uglier, okay, anybody who bought further back, okay, is now thinking, wait a minute, my profits are eroding. I need to think about this. I had a big vacation plan. The market was going to pay for it. Now, might not be such a great vacation. So keep in mind, and this is going to channel Tom McClellan's mother, late mother, Marion McClellan. People buy and sell stocks for a variety of reasons. Okay, I think the real quote is, everyone uses timing in their investments. Some people buy stocks when they have money, some people sell stocks when they need money, and others use methods that are far more sophisticated, okay? It is what it is. You need money, you have to sell some stocks, okay? You need money for whatever reason, to live. It's expensive to live, right? That has nothing to do with earnings or the action in NVIDIA or the situation in Nigeria or anything else, okay? It is what it is. Anyway, you can see we're on the cusp of both sides to the downside. That is not a good thing. Nasdaq Composite, same sort of action there too. The 20 has to get below the 30, but we're getting fairly close, all right? So that's not too good. 22, let's just say 2200 round numbers, or 2220, 2200, 22200. Keep an eye on that level. Not the end of the world. We take that out. Could get fairly ugly. We are a long ways away from that 200-day moving average. That might be a good little exercise. Go in and look at the Landry line above the 200-day moving average. And when it gets to a couple hundred or so, the market might be very overbought longer term and due to correct. Not that you want to time on that, but just kind of have that in the back of your mind. You always need to kind of play devil's advocate with this stuff. Let's take a look at the Rusty once again. Rusty not looking too good. Oh, now we have an outside day down. Okay, so that's pretty ugly. Okay, especially you got to realize that everybody was given new hope this morning. Okay, all is okay. NVIDIA was at all-time highs. What, a couple of weeks ago, a few weeks ago, and then today you come in and it gaps open, this huge gap open, and you're like, oh, happy days are here again. It's going to be fantastic. And I saw a bunch of memes out, and it was all these little columns holding up the market, and like market was up here, and then you had one little stick on the right side and said NVIDIA. So there's some truth to that possibly. So big fat opening gap reversal there. truth, what do you call it? Full disclosure, I'm short 20 shares of the video at the moment. AI, not looking so good. Right here at multi-month lows, we're going to have a bow tie to the downside there fairly soon. Pay attention to these bow ties, okay? So robotics and AI, the bow tie would have been coming into today. The short would have been right below this low on that particular setup. Cybersecurity, bow tie, this would have triggered today, breaking down. EFA shares starting to look kind of ugly, gap down, bow tie to the downside almost. Bitcoin we talked about. Gold stocks look okay. They don't look fantastic, but they look okay longer term. As long as this pullback low holds, I think we're going to be okay. This is, I'm sorry, gold commodity. Gold stocks, same sort of pattern happening there too. Getting whacked a little bit today. Unfortunately, broker dealer now breaking down at the bottom of its range, okay? Now on the upside, biotech looking pretty good today, notwithstanding. I'm long Lab D at the moment. I think I'm still long. Looks like I'm getting ready to get stopped out. Outside day down in software, that's looking pretty ugly. Took out the 200, okay? Again, it's probably a good idea to dust off these longer term moving averages. Thanks again, Jim. Bow tie to the downside. Now, one thing you want to pay attention to is the angle of inflection of the bow tie into the 50. The harder it goes, dives into that moving average, the uglier the top usually is, okay? And that's, you want to quantify that, but you can see back here, it sort of rolled over. It wasn't quite as sharp as it is here. It's much sharper angle there. The fence was looking pretty good, and now outside day down, that's starting to look kind of ugly. Support back here. Obviously, you want to avoid these areas, except for possibly biotech. Major drugs has been looking pretty good. Healthcare in general has been looking pretty good. So I don't know why. I guess because there's demand. I'm sure there's some reasons. Something to do in Washington, maybe. Semiconductors, we could bow tie the downside fairly soon. The 10's still above the 30, and the 20's above both of those for now, though. And also, you got a little support down here, but if that gets taken out, it could get fairly ugly. So you kind of get the idea by now. One or two more sectors, and I think that's enough. Finance has been topping out for a long time. And by the way, this reminds me, Greg Morris once said that, and this is kind of counterintuitive, but it makes a lot of sense. Everyone thinks like the market crashes, okay? And, you know, maybe the market's crashing today, right? But it feels like a crash. We're only off 34. Isn't that crazy? On the P's. Anyway, Greg pointed out that tops are more of a process and bottoms are more of an event, okay? And that's, I mean, I'm just happy to look at this one, okay? So look right here. You've got an event low, bam, and it goes right back up. And then what do you have here? Kind of a process type of top. Take a look. Let's just grab an index like the NASDAQ, okay? So look, here you go. Here you have a process type of top, and then bam, you have an event. I'm pointing at my screen. An event type of bottom down here. And you go back in time and look at a lot of the tops and a lot of the bottoms. And not all of them. I mean, every now and then, I think 2008, we kind of bumped along for, but that might have been an event too. But there's been a few markets, I want to say 2003, 2004. One of those markets took like a year to bottom out, which is great because it gives you time to react and look for the bow ties and all that other stuff, as opposed to these V-shaped recoveries. All right, I feel like I've covered everything that needs to be covered for now. It's looking kind of ugly. Check back often, okay? Today is important. If we recover from today and go up, that would be fantastic. That'd be fine with me. I don't mind getting stopped out of my intraday stuff. But I think now's the time to pay attention. The easy part is over. All right, you guys want me to look at any individual stocks, anything you want me to take a look at? I'd be happy to do that. This segment doesn't seem to work as well now that we had the Facebook group because we just talk about them there. All right. Well, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. Everybody in my Facebook group, I'll see you in a little while. Everybody else, happy Thanksgiving. No show next Thursday. Obviously, it's Thanksgiving in the States. Everybody have a great Thanksgiving, and may the trend be with you. Thank you so much.